All right, we're live. Showtime, baby. What a last few weeks. I mean, this has been crazy ever since we started this show. It's been such a volatile market. I mean, last night before I went to bed, I opened the futures to see they were down 400 points for like 2 seconds and then quickly bounced up to down 180. Obviously, what happened was they said that the trade deal was off. Then Trump saw that the market was tanking, quickly came back and said that the trade deal's on. I mean, this market's so full of shit. Let's call it what it is. The trade deal is not happening, arguably never was. And the market is wanting to just shrug off every ounce of any sense of negativity in order to just let the bulls take over and go higher. I mean, anytime this has happened in the past, at some point it's due for a big sell-off. You could only ignore reality so long. I don't care how much liquidity is getting pumped into the system. I don't care any of the bull arguments. Like they sound greater and greater by the day, and more bears keep kind of holding over and just getting frustrated. And I just don't understand how much longer. Actually, I do understand. It can go a lot longer.
It can go for years. The fact that this keeps being brought up means that it's not that bare of a market in front of us. Because when you think back to any market that's collapsed, never in history was right before then the common theme, we're due for a huge sell-off every day. When you think about it, like that's just not how it works ever. So I think that if anything, there's a lot of fear out there. And there's still money on the sidelines. And the China trade war, any way we spin it, China and the US have to play nice for now with what's happened with the pandemic. They're both, at the end of the day, they need this for numerous reasons. Long term, I don't see it being a real trade deal for sure. You're dead on. But I think they're going to play friendly with each other for the media and to make sure the world doesn't fall apart in the foreseeable future. China, with their technology, if they were able to have advanced IP on their own internally the way they want, they couldn't care less about the US. Unfortunately for them, and fortunately for us, that's just not the case. They still need a lot of technologies that they just don't have the ability to have in China. And that translates to a lot of other things, which is a different conversation. But going back to the dialogue, I think we're in okay shape with the China trade war thing with the market. I don't see that shitting the bed. If it was going to, Peter Navarro wouldn't have come out and quickly been like, oh, no, we're fine. We would have heard more of this leading up for Trump letting it go down. Who knows?
Look, I'm curious to hear your opinion, but all I'm going to say is the market is able to see through what's real and what's not. And all it takes is a few days for that euphoria feeling to kick in, where no longer people are saying that it's a sell-off. And you could hear it in certain narratives. Like you hear Jim Cramer, he's just as bullish as you can get now. And you got to really look for the guys who are willing to come out and say that this rally is built on the biggest explosion of debt our world probably is ever going to see. And I mean, Dad, what are your thoughts on it? I know we talked a little about this last week.
You know, you could get your mindset in a negative or a positive mode and give 10 reasons for each. I think when you're trading, you want to pair off and peel off positions on a day like today. And, do I want to go out and buy a stock today? There's no way. Not when the market's up 370 after that little blip last night. It just doesn't feel right. And that's what I'm going to do today. I'm just going to try to peel some positions down or pair positions down and get to a more comfortable level where I won't mind buying.
And maybe you could talk about this a little bit. I'm not sure if you guys look at this as relevant at all, but it is interesting to see there's separation in markets happening where you look at the NASDAQ's at all-time highs. It looks like it just goes up every single day. And saying that it's really almost made up of this point of three main companies with Amazon, Microsoft, and Apple, whose market cap together between the three exceeds 4.3 trillion and makes up 20% of the entire US GDP. So on one end, it's obvious that there's this safe haven, and I say that lightly because you don't want things to go in the other direction. It seems like every fund manager and every small-time trader, everyone's crowding into those three names, where if they start to go down and there's a sell-off, you almost have every single fund in the world that's got exposure to those names. So I don't know if that's a good thing, bad thing. When you look at the Dow is still hovering at its 2018 moving average levels. So on one end, you have that whole side of the market kind of still stuck in neutral, if you ask me, almost still in bear territory. And then you have the NASDAQ, which is just this tech bubble. And I'm not calling it a bubble. These are great companies, obviously. But
yeah, you're right of Apple, Microsoft, especially. They're in every single index. They're in every single mutual fund. If a portfolio manager can figure out a way to put Apple and Microsoft into his account, he's doing it. And I don't know if you ever look at mutual funds and holdings, but you will find Apple and Microsoft almost at the top of every list that you can possibly say, high growth value, whatever it is. It seems to be the same two stocks are in every portfolio. So it works to the advantage when it's going up, and it's going to be really very negative for the market if those things turn, because they're so held by everybody. And, I was actually thinking today, how do I pair Apple or Microsoft and not take a capital gain? And I'm thinking I should be selling some call options going out to January of next year, or even closer in. You could always buy back the options, but you could lock in a nice return if you don't buy them in, and just, take I wouldn't say sell all your Apple or Microsoft, but maybe you want to sell 20% through options. So then you have the option later on in the year to either sell the option and not have the capital gain, or have the capital gain in Apple. You could play it either way.
Yeah, I think selling call options to kind of give yourself some sort of a hedge against your exposure is a great play right now, because you look at these stocks, they've run up. You don't want to necessarily feel like you're going to miss out on a huge bull run if it continues. So selling call options at least allows you to collect premiums if it doesn't continue. And then if it does continue, at some point you're getting out of the stock, but at least you're locking in gains that are more than there are now. So I like that. Let's talk about DraftKings for a little bit. I know yesterday. Yeah, so yesterday, Mike, I know you bought some on the dip. It dipped more, you bought more. Just to throw out what happened, it sounded like California was going to say no to gambling and not legalize it. Whether or not that actually happens, time will tell. There was that positive upgrade in the morning before that news came out, which had DraftKings exploding on the open. It looked like it was going to pop big, and then quickly gave up all the gains. And then the same guy that gave that upgrade came on CNBC in the afternoon once the market closed and was talking about how, DraftKings is a $55 stock, how California is going to legalize gambling, and he's been in the gaming analysis industry for 20 years, and he's seen this game over and over again, and there's no chance that a place like California doesn't legalize it. And
they won't have a choice eventually, is the reality. So they can play the politics all they want short term, but they'll be having to legalize it.
Yeah, no, I kind of agree with you. So I guess the question is, do you guys look at DraftKings as a neutral stock right now that's just going to be kind of hanging out for a while, or do you think it quickly shrugs off the 8%? I think it was an 8% dip that it had yesterday. I know I haven't checked in the last few minutes, but I know it looked like it was going to be up 3 to 4% pre-market.
It'll shrug it off. That's why I said yesterday I was expecting a big dip, which we saw immediately right after I spoke that with that California stuff. Obviously, I didn't expect that, but I felt like DraftKings needed what happened yesterday to happen. And, I think that'll be shrugged off pretty quickly. But in saying that, the sports narrative around the virus is more of my issue there with any resistance with DraftKings in the, in the short term. I don't know. We have to actually see there being seasons, because I think that'll be a huge problem for DraftKings if all of a sudden we find out the NFL is not coming back the way we thought it was. That definitely puts a bit of a wrench in things.
I think you bring up a good point. I almost think, though, that part of the appeal right now to a stock like DraftKings is that hype of things getting back to normal and the explosion that they might see from things getting back to normal. It's almost one of those sell the news type of stocks where if you hear that the NFL is going to happen, that's maybe when it's like, all right, time to get out of DraftKings. Whereas until, like, while there's no sports going on, it's such a spec play because everyone knows eventually sports are coming back. When they're exactly coming back, no one knows, but everyone knows that DraftKings is going to really benefit from the return of sports. I look at it like as long as this narrative continues where there's this unknown hanging over us about sports, it's a great stock because right now it seems like the market wants to explode on any ounce of good news, even if it's fake good news, which is how I look at this China trade. And market looks like it wants to open up 400 points. I think it'll give that all up almost immediately because it's done that almost every time the market opened up the last few weeks. But
I think it comes back to the reopening. That's what this all comes down to. How smooth, like how quickly can we get back to people consuming, working? Like New York yesterday started reopening. I think that's why we saw the market up yesterday was New York phase 2 reopening. When you think about the financial capital of the world, that's here. So I think that's what we go back to is how smooth is this going to happen? If we see any sign that things are not going to be going as smoothly as the market predicted, shit's going to hit the fan very badly. So I think the next couple of weeks are going to be a huge test. Are we going to see any more upticks in New York? I think that's a big thing because I know virus cases like Dan, you have it. The South's gotten battered. The big thing to me is the red flag. If we see New York start upping again in cases, you're going to see a huge sell-off in the market. So I think that's what we have to be paying close attention to.
Bob?
Yeah, every day we're getting closer to more treatments, more companies coming up with ideas.
People's doctors saying there might not even need to be a vaccine.
Well, I don't know about that, but
there's been a couple.
I don't think anybody's going to close down like they did before. The greater fear is the people are going to stay away on their own.
Yeah,
they get frightened,
and even like higher end, upper class people. The talk of saving money for the what ifs of their families getting sick when the weather turns with Corona. Like I read a Wall Street Journal article last weekend about that was pretty concerning, which never really came to mind. The whole consumerism kind of being in this holding pattern where you have people with disposable income, not necessarily just because things are opening, getting trigger happy. Mm-hmm. Some of them are hesitant. So that's definitely a problem.
Yeah, and I mean, also, I'm just going to throw out that when you're talking about all it takes is for them to see an increase in cases and for there to be a stumble of the reopening of the economy, all it takes is reading any news article to realize that's happening. And if I can just compare this a little to what happened in February, not that I think we're going to test new lows or have some massive sell-off because of everything that the Fed did, but there was a few week period when the market was just going up, where there was very, very clear signs that coronavirus was absolutely taking over. And in hindsight, it was very easy to know that sell-off that happened in February was obviously going to happen. There were articles every day leading up to it. It's really starting around the Super Bowl time, outlining everything going on with the coronavirus. Because the market kept going up, people just chose to kind of ignore that. And that's, to me, when I think back to every time there's been a big sell-off in the market, the narrative that supports the sell-off starts weeks before the sell-off. And this time is no different. And when it happens, I don't really know. I mean, obviously, we had that healthy little correction a couple weeks ago. And if you look at the market since then, it hasn't done all that much. I mean, the Nasdaq's gone up to all-time highs, but the Dow and the S&P, they haven't gotten back to where they were before it had the dip 2 weeks ago. They're getting close, but they're not. So are we going to see all new highs where, like, if you really think about it, if we are in a bull market and we saw almost a 10% correction a couple weeks ago when the market sold off, that's usually when the market reconsolidates and then hits its next leg. And if that is the case, we have a lot more room to run here because we haven't even gotten past the highs that aren't the all-time highs, but the highs that we were at 2 weeks ago before the sell-off. Dad, what are your thoughts?
Yeah, well, today is interesting, away from the news. The banks are finally having a good day. It's been a long time. And, I know the earnings start coming out in the next few weeks, but these stocks are way behind. And if you look at the charts, they really have not rallied at all, when NASDAQ's gone crazy. And that's kind of been the main thing holding back the Dow. Because, you have a couple of names in there that are big Dow names like JP Morgan. And, if you think this thing's going to have legs, then the banks are a good way to play it if you're afraid of the high-flying NASDAQ stocks. And the charts all look the same. You could go right through the list.
So will you be buying banks today, Dad?
Well, I already own banks. I'm up to my neck in banks. So I'm hoping it goes up. But
and Dad, you're in the camp that, like, for a rally to really be legitimate, for this rebound to actually hold true, you need the banks to be a part of it because they're really
case, yeah.
But is part of the banks, like, seeing how low these interest rates are, and it sounds like part of the bullish stance I have on banks is they have more cash than ever right now. That's why rates are so low. They have more deposit slips than they know what to do with. What can you make a bullish case?
What do they do with the cash? That's the problem.
That's what I'm getting at. So what do you state a bullish case with?
They have to make money on money, or they don't have a great business model. So the reason the banks have not been bought for a number of reasons. They're worried about bankruptcies, and they're worried about making new loans, and with the yields being so low, they make less money. There's not enough in it for them, but they figure out ways to make money. They're making a lot of new
programs maybe coming out of this that we haven't even heard of before for different types of loans that might be stemming from this whole thing with how much.
Well, anytime the government gets involved in getting the banks to do loans, it's usually not a good thing, because they force them to loan money to poorer people that don't actually fit into the criteria to deserve a loan, and those are the loans that they lose money on.
So, do you see that starting to happen again?
I don't know. I mean, I'm not sure how that's going to play out. A lot of that'll come down to who wins. And
I think it is fair to say, though, that the banks are definitely not in any type of bull market, and they're almost in the complete opposite. And the banks what they're doing now is definitely a sign of just what's actually going on in the economy. So, like, when you look at the banks and how beaten down they are, to me, that means that there's a lot of companies that they have outstanding loans out to that are probably on the brink of declaring bankruptcy. And we'll see a lot more of that over the next 3 to 6 months in these retail stock names. And
I think a lot of it, though, is the rate. It's hard to make money when you have rates and nothing, and you have all this excess cash. So I think that when you actually look at the supply and demand there, it's a terrible model for them.
Yeah,
that's part of it.
They figure out things. Like, there's so many deals right now, equity deals, bond deals, that they're making a lot of fees. And in fact, like, Goldman Sachs had a fairly good day yesterday, even though the banks were weak. And, they kind of stand out away from the banks because they're a deal company. That, Goldman, Morgan Stanley, not so much the money center banks. So maybe that's a better way to play it, because they at least are getting these fees, and they're making money trading.
Yeah, Guys, I know we've talked about Penn a lot on this show before. I just want to say yesterday it was pretty entertaining, but nothing to not be expected. So they had the CEO of Penn along with Portnoy and Nardini, who's the CEO of, I don't know if I'm pronouncing her last name right, but Erica Nardini, CEO of Barstool. They were on Mad Money last night. And it was pretty hilarious because they both flat out said that Penn and DraftKings should be reversed in market cap and that Penn should be a higher market cap company than DraftKings. Portnoy was like, I've never not delivered in my life. Our gaming app is going to be the gaming app of the world that's commonly used, which is set to launch at some point, in a few months from now. And as soon as they started to talk, the stock went up about 2% almost instantly. Hasn't given up any of that. I have a sell order in today for a lot of my shares at 33. Not that I don't believe in Penn anymore. It's just such a great trading stock where it just goes back and forth all day, all week. So I saw it was at 32.80 when I was looking this morning. I don't know what it's at right now.
Yeah.
I'm hoping it gets over.
It's about the same.
Yeah. I'm hoping it gets over 33 for a brief period, and then my orders hit. I still obviously own some Penn, and then like it does every day, I would expect right around 9:30 a.m. or like 10 a.m. I'm sorry, for that stock to just kind of go right back down into negative territory for maybe 20 minutes and then pop right back up to the 33 range. I'm definitely looking at day trading Penn today. Another
I did
stock I'm
yesterday.
looking at.
I got in on the low, a cent off the lows. And
nice.
I played it also. I was watching Davey, and on his website he said he was going to be on Kramer. And as soon as I saw that come up, I bought a little bit of Penn, figuring it'll get a pop in the aftermarket, and it did, because we're going to talk it up. They both love it.
I mean, there's not a greater showman on our planet right now than Portnoy, and hearing him talk.
Trump. They're the best showmen on the planet. And
it's amazing.
He's younger and more, he's at a different point in his prime now.
Yeah, but I was watching, the show last night, at the close, and I was watching the streaming, and all these people are writing in stocks because they want Portnoy to mention the name, and then the stock's going to pop. So there was one stock that kept coming up over and over again. It was like out of control. And Portnoy finally mentioned it, and he said, I just bought this stock, and it was about, 70 cents, right? It immediately goes up like to 77. And today it's over $1 pre-opening. So
oh man,
time to short it.
What's that?
Sounds like a short seller right there.
Yeah, I don't even want to mention the name because it's so ridiculous. But this is going on every single day. And there's people making money off of just buying these names and quickly selling them. So that's the other side of the market. That's totally away from NASDAQ, totally away from the banks and all of this. But that's how the little guys who are just starting out are playing the market. They just jump on the bandwagon, right?
No, right. And those stocks, people are calling them pump and dump stock, where oftentimes you'll see a penny stock turn into like a 800% stock. And I've been playing the other side of those the day after they have their pop. It's kind of interesting. You could look at pre-market high volume movers. Today, Bank of America is on the list. So that could be an interesting trading stock to move in and out of because it's just got a lot of volume right now. But if you look at the stocks that had these really, really aggressive pops for no other reason than just these pump and dump reasons, it's often the day after that you can catch them on the downside. And it's the day of that you can catch them on the upside. If you look at the pre-market and you look at shares that are higher volume than normal. So like when you talk about these Portnoy stocks, a lot of the time pre-market is when they get their action, and you could either jump on it pre-market, and oftentimes it'll really explode at the open for the first 30 minutes. You got to be careful with setting up loss orders on it. But yesterday and Friday, I was short U1K. The symbol is UONEK. I don't want to say all day. I was moving out of it, playing it from about $3, a little under $3, down to 282, back and forth all day, which is 17 to 18 cent gain on a stock that's under $3, which are really, really good gains. And it was actually fascinating to watch it go back and forth between that 296 range down to 282. And there was it was clockwork back and forth all day. Same with Hertz, where it was trading between 149 and 141 all day. And again, these are stocks that a couple weeks ago, everyone said this ends in tears. No one's talking about how these stocks that have gone up hundreds of %, they are ending in tears. They're all going right back down where they came up, just each one on their own terms. So Bank of America is one of the stocks, and I'm probably going to make that my pick of the day. I'm not saying I think Bank of America is going to go up huge today. I think a good day trading opportunity because it's going to be trading on high volume. It's on that radar this morning. So I might look to pick up some pre-market and see if I could ride it out with a little market pop on the open and then possibly turn it into a short, depending on if it does get the pop that it looks like it can get on the open. So Bank of America is a stock I'm going to try and mess around with today on the day trading side. Mike, you got a stock of the day?
Dad, start with you.
You know, again, I don't like buying a stock when the market's up like this. So unless there's a dip in the market, I wouldn't recommend anything particular. You know, I mentioned Ford yesterday. I don't know if people got stopped out.
I like that. I went with you on that. I'm up nice on it.
Yeah, the stock is up a little bit today. If that opens down, you know, I might try to pick up a little more. Otherwise, I'm going to just hold it.
Until when? What are you thinking there? A high sixes?
Yeah, high sixes for a few days on that one.
And Mike, before you even give your stock, Dad, if Ford does go down to a certain point, at what level would you be looking to add to the position?
I'd be somewhere around 6 1/4.
That's where I got it.
Yeah.
And then where would you look to sell it? Like, I know you probably already have a sell limit.
680.
I have a sell order out there now at 643, but you know, on a scale. So
I mean, those would be fantastic gains.
Yeah. If you sell, let's say you buy, you know, 5,000, you sell 1,000 every 10 or 12 cents. That's pretty decent return. If you pull that off.
I loaded up Boeing yesterday when it dipped to 182. I bought 25 more shares, and I also, Dan, got some more LSXMK yesterday on near its lows. And today I own a lot of Square, which has run up like insanely the last few months. It's gone on quite a tear. I'm a long-term holder of that. I just feel like that thing is like run rampant on a whole nother level. Part of me wants to get out of it completely because I know it's already a holding of mine in my IRA. So I don't know. I'm kind of torn on that. I'm waiting to see. I made a big move on DraftKings yesterday on the dip twice. So I'm long a ton of DraftKings right now, 2,000 shares. So I'm going to monitor that today. I'm going to probably day trade Penn again because that's treated me very well when I've been in and out of that stock. I got out of Penn yesterday morning at the open completely for my initial holdings. Then I jumped back in and jumped right back out again. Yeah. So
I just throw this out there because it just happened while we were talking. Plug updated their revenue guidance and gave themselves an upgrade, basically saying instead of like $2 billion, they're going to do $2.1 billion.
Wow.
Their stock's up almost 50 cents pre-market on high volume right now. That just popped into high volume pre-trading stocks. So Plug.
That's the level where someone had a price target, right? At 6. So
now, what are your thoughts on that? I know we both got out of that at like 598 a couple weeks ago.
Yeah, you know, it's one of these that you come back to if it dips, and keep an eye on it. But I wouldn't buy it on that kind of story.
Is Peter Cashman still going ham on that thing?
I don't know what he has left. He'll probably sell it pre-open.
He hears news like that and he's running for the hills. I feel like that guy hates being recognized with stocks.
Now, the other thing I wanted to mention, Alcoa is up a bit today. This might be a good day to, if you still own that one, to sell it at 12 and a quarter. Somebody came out with a neutral and price target below where it is. So,
all right, guys, that's the end of our show. Let's make some money today. Let's see the market hold up here, or let's at least day trade to success. All right, take it easy.